So the market came out with a little bit of gusto this morning. Now, there were several factors, of course, the rollout, just the visuals of the rollout. Really, I mean, it made you feel good, right? Gave you some goosebumps of the COVID-19 vaccines. Of course, really high hopes for more Fed accommodation and potential fiscal stimulus agreement as soon as, like, today, right? While there's no doubt the vaccine is central to getting the economy back on track, let's face it, the news is somewhat anticlimactic, especially with these mounting local lockdowns. Now, on the other hand, how many times can investors actually play Charlie Brown to Congress Lucy when it comes to this stimulus promise? And how much more will the Fed pump in accommodation and at the same time remain optimistic? They've got an interesting balancing act on Wednesday. Still, of course, the bias in this market is squarely to the upside. The question, of course, is how long will it continue? Let's ask Money Map Press, their chief strategist, Shah Gilani, Rosecliff Capital CEO, managing partner, Mike Murphy, and Kingsview Wealth Management CIO and Fox Business contributor, Scott Martin. I want to start with guys with the notion that there is no alternative to stocks, otherwise known as TINA. I say she's finally arrived. You think September, October, November, huge, combined almost $79 billion in money went to equity ETFs, only $39 billion into bonds, and that trend continued last week. So, Shaw, if Tina is finally here, how long will she stay around?
Tina has been here, Charles, for some time, and she's not going anywhere. There is no alternative to equities because the Fed is going to maintain its low interest rate environment. The only thing I think we're going to be looking for this week is the new acronym, which is QOG. That is qualitative outcome guidance. In other words, are they going to taper? They tried to taper in 2013. We saw what the market did through a temper tantrum, and we ended up in the tank, and the Fed pulled back. They have no intention of doing anything but maintaining the status quo here because without stimulus, with the COVID raging, there's nothing that the Fed's going to do to interrupt this rally for the stock market. So it's more of the same. Equity investors just should keep on piling in. So far, so good.
So far, so good, Scott, but I got to tell you, maybe on paper Tina was here, but the money was going into bonds big time. I mean, huge amounts. It's something like 4 times in any given month, 4 or 5 times more money into bonds than stocks. That changed in September, went back to what it was in October. We had a record last month, $62 billion, and U.S. equities alone, $4 billion last week. So everyone's piling in. Is this all that money we've been talking about for a long time on the sidelines?
Yeah, it could be, Charles. And the bond market, frankly, the last month or so hasn't had too bad of a time either as far as price. So I think bonds are a good indicator of kind of where that fear trade kind of juxtaposes itself versus equities. Gosh, man, as far as Tina goes, you know, I dated a girl named Tina in college, and she dumped me. So I've got a kind of a weird spot in my heart still about that. I do think, though, there are some alternatives out there, frankly, Charles. I mean, I still like gold here as a commodity, as kind of an alternative to really stocks and bonds and all the liquidity that's out there. Because like you mentioned in your intro, with the Charlie Brown and the football kind of montage, you know, with respect to that, the market will keep coming back, trying to kick that football as Charlie Brown did, with the hope that a stimulus package is coming down the road, which eventually I think it does, and the market gets to kick the football to higher prices.
Well, on that note, I'd say fool me once, what the heck, fool me a million times, right? Mike, I want to bring you in on this because, you know, we saw the markets assume in all of, you know, after July when those deadlines came and went, that we would still get some kind of stimulus. So we had a good August, horrible September, okay October. Again, it feels like, you know, the Wall Street believing that something's going to happen. First, I want to know, do you still believe it will happen? And what would happen to this rally if for some reason we didn't get any stimulus the next couple of months?
Hi, Charles. Nice to see you. I think without stimulus, the market would have a correction. But whether that's 5%, 10%, 20%, I don't know. But the underlying fundamentals are enough to support the market here. So if the vaccines are going to get us past COVID and the economy is rebounding, the stimulus becomes less important. I think from a human standpoint, more importantly to me, is that there are people out there who really need this money to operate their businesses and to survive. Those people need to get stimulus and need to get it quickly. But from a market's perspective, there's enough here. The market is strong enough to keep moving higher without that stimulus.
All right, now we're talking to market in general, but what we all know is that this whole rotation thing, that there have been pockets of strength in any given period. Even today, for instance, NASDAQ is up over 1%. The Dow's drifted into the red. So I want to talk about rebalancing. This week we see Tesla is going to go into the S&P 500, but also major changes at the NASDAQ 100. Now remember, the NASDAQ 100 is really just a monster. Up 43% this year, 93% in the last 3 years, up 145% in the past 5 years. Scott, I know you like your gold, but you also got to like some of these names that we've got out here that are going on the NASDAQ 100 or other names that are already there.
Yeah, Adobe is one of my favorite companies, probably, Charles, of all time. And then I would add to that Microsoft. And then I'll tell you, how about news flow recently on Facebook? I mean, Facebook, if you were alert and aware, last week had a good chance to get in cheap on Facebook before we got a nice bounce. So I think with some of these names, as you mentioned, that are already heavily loaded and ready to fire in the NASDAQ 1, I think, Charles, you look for kind of news-making events that are very short in nature as far as they don't stick around long, but can knock those stocks back down $5 to $10 in a given day. That's when you got to pounce.
So, Shaw, we've got Peloton being added to the NASDAQ 100. I think that's huge in the sense that people are wanting which of these stay-at-home stocks might you want to hold as we get the vaccine out there. And, of course, you've got a couple of software names being added. You've got a semiconductor being added. I like the idea that these, when they start to rebalance all of these things, I think some of the major indices do it too slow. You like any of these names that are going in or some that are already on this NASDAQ 100?
All of the big names on the NASDAQ 100 we own, and we're going to continue to own those. We actually bought some more on the dip recently. So, yeah, we're still going to continue with those, Charles. Any of the ones that are being added, Peloton, I'm not so sure about. I think it's rather fully priced. If the market continues higher, I think investors will, again, on that stay at home, work from home theme. We think maybe bid up Peloton a little bit more. But we own a bunch of the work from home stocks. We've done very well with them, including Citrix, Datadog, a bunch of the others, Netgear. We loaded up on a lot of them and have done very well with them. And I think we're going to continue to hold those for sure.
I want to take a look at Amazon. I think we could kind of call this a stock of the day. Getting a good boost. Jeff Bezos apparently is really back, hands-on, in control. I love it when management does this. We've seen this happen over and over again, Mike. I know you invest in companies long-term, and you look at management. How important is a move like this for you?
I think it's great, Charles. And really, it's Bezos coming in to kind of steer the company for the next, whether it's 6 months or 6 years. But as they move into so many different areas, we all know Amazon is ordering presents, and now they're moving into pharmacies. They're moving into every part of our lives, in health trackers. So they're going to be in so many more things. Bezos is going to lead it, but this is a name. You don't need to trade Amazon. It's one of the real true growth stories out there. You buy it on any pullback and you can go along for the ride because there's a lot more upside.
You know, perhaps the brokerage call in the morning came out of BMO. They said, buy Netflix, sell Disney. Scott, you like that kind of trade?
I do like it because the hype on Disney just got crazy, Charles. I mean, I know the Disney streaming numbers are great, but I still like Netflix over Disney longer term just because of the content. I know my kids are probably screaming at the TV right now being like, Dad, that's all we watch. But as the kids grow older, as the parents get more time to stream, hopefully here, if that ever happens again, I still like Netflix as far as a content killer over Disney and on a valuation basis going forward too.
Real quick, Shaw, I want to get to you and just, we're talking about all these drivers, right? You're looking at bond yields, you're looking at money coming into the market, you're looking at no alternative. What's one risk, though, that we should share with the audience that you think is important to know?
I think the IPO market is getting a little frothy, and I think, when you're looking at companies that are coming to market that have solid earnings, great growth potential, maybe in the technology sector, then they're probably good buys, even though they're fully priced, I will say. Now, some of these are coming out now that are jumping 100% in a day. So that's well and good if the prospects are there, but I'm looking at some of the IPO SPACs that are coming out that have yet to acquire operating companies. They're all going to go after probably a lot of the same companies. There's going to get a lot of fluff in that area. I think they're going to bid up these operating companies. They're going to buy them out of private equity companies. And I think it's going to be a race to the bottom as far as those. That worries me.
Yeah. Watch what the insiders, those inside investors are doing with SPACs. If they're selling, I don't think you should be buying. Scott, Mike, and Shaw, I couldn't start with three better guys. Thank you all very much. Appreciate it. Meanwhile, folks, did you see this?